Good morning, everyone, and welcome. For those of you who've just come to Dreamforce for this event, welcome. For this particular session, welcome. For those of you, the millions of people online watching this, welcome as well. My name is Simon Mulcahy, and I'm the General Manager of Salesforce for Financial Services. And I'm actually very excited to be in front of you today. So I've actually only just taken over the role in the last 7 weeks. Prior to that, with a bit of a career actually at the World Economic Forum, I've been here really driving Salesforce's customer innovation and transformation programs. Much of that has been focused, probably a number of you have done Ignite, but it's been focused quite heavily on financial services, in fact, and going deep into how can Salesforce really help insurance, wealth management, asset management, and retail banking organizations really move closer towards the future and leverage Salesforce much more effectively, much more strategically. The number of things I'm going to be talking about today are definitely going to be forward-looking. So please do make any purchasing decisions based on all of the information contained in this document here, which we will send you in triplicate directly after this meeting. But first of all, thank you. Thank you very much for being here and for filling out the seats, because it would have been really embarrassing if this was an empty room. But thank you also for being a customer, for coming to Dreamforce, and much more importantly, for providing us your advice, your guidance. Not only that's helped us to navigate our way here, but definitely as we move forward and over the course of the next exciting year. This is a really, really exciting time for us. It's a really exciting time for being a customer of financial services, because we're really feeling that the financial services industry is waking up to the fact that the customer is in the middle. Your products serve the customer. It's the customer in the center of everything. And this is a new era of connectedness, where your employees, your customers are connected like never before. But it's also a new era of trust. It's where your customers, which are also your employees, they trust not experts, but they trust their peers, they trust their networks. But it's also an era of mobility, a new era of mobility, where the future infrastructure of tomorrow's banks is going to be paid for by your customers. It's your and my smartphone. And it's not just an era of change, but it's actually a perfect storm of industry, cultural, and technology revolutions. And all of that has got you all into this room now at a very exciting time. And it's something that we've been tracking, of course, for a long time. We've been growing, as you know, steadily, well over 30% per annum. And a lot of that has been on the great advice that you have given us to be successful in financial services and serving you. And that 15 years worth of knowledge is definitely going to catapult us forward. I'm not going to be talking specifically about announcements we're going to make, but what I will advise you on is the fact that over the next coming months, you're going to see some really exciting announcements from Salesforce about financial services, about our focus on making it easier for you to use Salesforce out of the box, specifically in financial services. But that knowledge, that focus on financial services does not stand alone. It's also exciting that we're doing that based on our knowledge of all these other industries. And it's those other industries where we're seeing very much the bleeding edge of customer centricity, because it's out of the amazing experiences that they have in the high street with Burberry or Louis Vuitton, that they walk out of that experience, or maybe they flip over from the Uber app into your experience. And in many cases, they still go back 20 years. So what are those amazing experiences that are possible in today's technology that we're seeing in other industries, and how can we steal them and add them to that knowledge of financial services? And I want to talk to you about 4, I think, very clear customer demands today, and how others are already really standing up and leaping to service and really responding to those demands, how financial services leaders are already doing that, and what that means for you. And I'm going to start, first of all, with the number one sort of demand from customers, and that's know me. I don't know if you know that recently Ben Bernanke applied for a house, to refinance his house, and he was turned down. That says a lot about the industry, because that was definitely not a slight on him personally. it was the fact that he was dealing with an institution that wasn't able to know him. And that's what Burberry and Louis Vuitton and others are masterful at. They make sure that every single touch point with the customer delivers their brand values. It captures information, their needs and their interests, and makes sure that whether you're online or you're going to that store in London, the next touch point, be it in Singapore, they're able to pick up the conversation, and they're making themselves as customer-centric as possible. And that was the experience that Mark Benioff was referring to yesterday. Bring the whole organization to help me. Here's a fact. Your customers do not care less about your silos. And that's why it's really exciting that organizations like UCSF are doing such amazing things to break the barriers down in their organization and help a patient with chronic diabetes or with cancer get the very best treatment. 30 doctors from fundamentally different departments. How can they collaborate and share personal information, highly regulated information in a very traditional environment? And the question is, what would UCSF do if they were a bank? Well, for sure, they would ensure that you as a customer, if you're dealing with the bank, that they would make sure that every single department was able to work together and collaborate, so that experience for the customer would be one of they were being served by one team. Uber, make my journey effortless. And there's some really, really great research done by the Corporate Executive Board. And what they did was they looked very much at sort of mind-blowing experiences. Everybody points to the Ritz-Carlton experience, saying, we need to have an experience like that. But here's what they found. They debunked that myth, that the correlation was not with amazing experiences and loyalty is what you want. It's with creating effortless experiences. And that's what Uber and Lyft and others have done with Salesforce. They've looked at all of the moments of engagement with the customer and said, wow, look at all those moments of friction, and they just removed them. And you can imagine that if Uber or Lyft were a bank, that's what they would be doing. They would be looking at those moments of engagement with your customer, and they would just be eradicating them, making it really, really effortless to be an employee serving your customers. Make it simple and effortless. Advise and guide me. So for 80 years, the experience that everybody has had with their car has been one of, you're a relationship with a mechanical instrument. There's been no relationship. And yet, organizations like Automatic are fundamentally revolutionizing it now. When you sit in a car, that car is capturing terabytes of information about you, the speed you're traveling, where you are, how you're driving. It's recommending, it's scoring you, it's recommending improvements to how you drive. And then when you leave it in the car park and can't remember where it is, it helps you find your car. It diagnoses engine faults. And yet, your advisors, when they're collaborating with your customers, are they able to have that data-rich environment? Are they able to have that conversation? If Automatic were a bank, they would ensure that your advisors had so much information that they would be able to coach, not sell at your customers, but coach your customers on the next stage of their very, very personal journey. So there you have it, a lot of demands from customers. This is what you need to do to be customer-centric in today's world. And the thing is that there are people in this room who are already managing and driving that. And we've got fantastic examples of organizations such as Wells Fargo, who are reinventing their customer experience, Charles Schwab, who are doing it with their financial advisors, Huntington Bank, who are transforming lead and referral management, GE Capital, who are creating really, really powerful communities, AIG, AXA, reinventing insurance. So there's leadership already in this room. And it's sort of logical why there will be leadership in this room is because there's an absolute fortune to be made. Just the wealth transfer alone of baby boomers handing down money to the digital generation, Gen Y, is $2 trillion in invested assets which are going to shift hands. There's $3 trillion in the next 7 years of uninvested or underinvested assets that are going to change hands as well. There's also a great piece of research done by Gallup. And what they've identified is that for organizations that are really, really engaged with their customers, there's 37% more revenue you get from customers who are engaged. And that means, obviously, greater balances, more products per customer. So there's clearly, for the winners, there's a big, big market opportunity. Which brings us back to the fundamental question, how can you all connect with your customers in a whole new way? know them better, help them as a team, get all your experts together and be in front of your customer as one team. Make their journey effortless, and not just their journey, but your employees' journey. Make it easy and simple for them to help your customers. Make it simple and easy for them to advise and guide and be the coach. That's what we're focused on doing at Salesforce. I'm going to come back in a minute and talk a little bit about, quite specifically, what we're doing, what you're doing already with us. But maybe blithely to answer this question, I'm going to ask Chris Skinner to come up. And I'm excited to have Chris Skinner up on stage talking to you, because actually it was, I think, 8 or 9 years ago. Chris looked a lot younger then. I was working at the World Economic Forum, and we brought together about 150 CEOs from the top financial services institutions in the world and from technology leaders in the world. And we ran a year-long program to look at what was the future of technology and financial services. And Chris Skinner was one of the experts that I worked with when we did that work. And it's great that now he's back on stage with me 8 years later. I probably look the older one actually now. But Chris, over to you.
Thank you, sir. Simon's looking younger. So, good morning, and it's an honor to be here. I guess, as Simon said, he's known me for a while, but I'm very well known, I guess, in Europe, because I run a group in Europe called the Financial Services Club. But I'm not so well known in the rest of the world, but I'm becoming more known because I have quite prodigious output. My prodigious output started in 2007 when I started blogging about banking and financial services. And I'm a strange beast, I guess, in that I eat, drink, and sleep this stuff. So I actually blog every single day and have done for 8 years. And as a byproduct of that, I've got a number of books, exciting ones about European directives and regulations, but more exciting ones like the new one, Digital Bank, which I'm shamelessly going to plug because it's the presentation I'm about to give you. The book is doing quite well. It's 400 pages and lots of case studies. So in 15 minutes, I'm going to give you the headlines, and you can see what you think about them. The gist of the book is that most institutions were built in the last century, and they were built for the physical distribution of paper in a localized network. It's bricks and mortar based. Now we live in a world where we deal with the digital distribution of data in a globalized network, and it turns the business on its head. It's fundamentally changing the way in which we deal with value. Not money, value exchange. It's a different way of thinking. For you, it means that your organizations have to do 3 things. They have to change their business model, change their architecture, and change their organizational structure. And if you haven't done that, you will not be competitive in the 21st century in a digital distribution of data in a globalized network. You need to change your business model from physical to digital. It's not easy. It can be done. You need to change your architecture from channel thinking to access thinking. It's a different way of thinking. You need to change your organizational structures from being product silos to being customer-focused. You may think you're customer-focused, but many organizations in finance are not. And when we look at financial services, all your businesses are typically 3 businesses in one. You have a manufacturing business that produces the products. You have a processing business that processes the transactions. And you have a retail business that's meant to be customer-focused and customer-intimate. And those 3 businesses, for many institutions, cover a gamut of financial needs, from retail banking needs for individuals, the mass affluent, to the high net worth private banking needs, to the commercial banking needs for corporates, to investment banking, insurance, and wealth management. And last decade, we saw quite a few big branded financial institutions trying to do all of those things across all of those businesses, across all of the world. And that model is broken. There is no such thing as universal banking anymore. HSBC is now in 74 countries. It is not a global bank. Because no business can be good at all of these things. You're going to be rubbish at some of them. You can try and be good at all of them. And in the old model of physical distribution of paper in a localized network, it was easy to control the customer. Therefore, you could control this model. You owned that model. But you don't anymore because technology is nibbling away at the whole thing, eating away at the structure, fundamentally changing that structure for the digital world we live in today. At the front end, the customer's got intimacy and relationships with devices, with screens, with apps. In the middle, you've got processors doing amazing things with real-time processing through plug-and-play API technologies. And at the back end, you've got companies producing products that are fantastic, leveraging data through the cloud. Some of your businesses may be doing some of those things, but there's some businesses that are doing those things far better. The first that I encountered was in the retail credit world on the 1st of March 2005 when Zopa launched in the UK. Zopa is a P2P lender connecting people who have money with people who need money. But they provide the digital platform to connect those people rather than a physical platform. So they have replaced the financial system that connects people who have money with people who need money with a digital platform system. And right now they're doing £500 million worth of lending in the retail credit markets in the UK. They've been copied worldwide. PPDI in China, Smava in Germany, Prosper and Lending Club in the USA here. And the reason they're being copied is it works. It's a good model. And you may think it's irrelevant, but it's going to be about $1 trillion of lending in 10 years from now, according to Foundation Capital. That's significant. That's why Lending Club is going through an IPO worth $5 billion. And that's just one little space of the market that's being nibbled away at by these specialist manufacturers of digital products. There's many others. At the front end in retail banking, we've got Moven and Simple, reimagining the customer relationship with money, making it visible in your pockets and purses 24/7 as you are living your life, so you know exactly what your balance is 24/7 as you live your life. There's a great company that's just started 4.5 years ago in the USA called Personal Capital, attacking the wealth management marketplace. The way it works is it's a mint for your wealth. And if you know Mint for personal financial management, this does it for wealth management. You put all your assets, liabilities, investment portfolio in Personal Capital, and it shows you visually how you're doing. But more importantly, it's free. There's no ads. It doesn't cost you a thing. So how do they make money? How can they do that? Because what they do is that if you have $100,000 or more of disposable assets, you get a phone call from a wealth manager saying, we can sweat your assets far better than they're being sweated at the moment, and we'll charge you 0.95% management fee per annum. Or if you've got more than $10 million, they'll charge you 0.5%. Again, you may think, so what? But they've already reached $1 billion in assets under management, $1 billion for a purely digital company. eToro, a Twitter for trading, changing the investment banking model at the retail front end. I don't need a broker to give me advice about where to trade. I just follow the best traders on eToro. The best traders get the most followers, they're the most popular because they make the most money. And all I have to do is click one button and I can trade exactly what they're trading. It's easy, it's simple, no-brainer, it's an app. Friendsurance rethinks the insurance industry. What is insurance? It's a common pool of shared monies, premiums, to manage the uncertainty of risk. Why do you have to manage that common pool of shared premiums for a company? Share it with your friends. Friendsurance does that in Germany. Every single part of the market is being attacked, nibbled, eaten. And in particular in transaction banking, it's the biggest space where we're seeing change. Apple Pay's just launched. Jamie Dimon, the CEO of JP Morgan, yesterday said it will cannibalize some of our business for sure. But it doesn't really. It's just adding a layer on top. It's a wallet. It's just a digital wallet. And inside that wallet, you have your bank. And the banks are paying to be inside the Apple Pay wallet. More fundamental change might be Square, which is being copied. When things are copied, you know they're successful. Square's being copied by iZettle, SumUp, Payleven, Empower. So many companies copying a simple dongle for point of sale. Why? Because it turns 7 billion handsets in 7 billion people's hands around the world into points of sale. Everybody can become a merchant. That's powerful. But it hasn't changed the system. It just sits on top of it. PayPal sits on top of the system. But PayPal's one of the companies that really gets what they do because they know they're not a retailer, they're not a manufacturer, they're just a processor. But they do processing really well. and they really get how to do processing, because when I say processing is now an API in real time, when PayPal launched their first APIs, X.commerce, October 2011, they saw their revenues increase, their costs decrease. Reason being, others are developing for you. So you don't have to pay anyone to get your stuff in their system, and once it's in their system, you get more volume. When they did the mobile API, it became even more successful. It's so easy if you understand what you're doing. Costs go down, revenues go up. But none of these have changed the system. What will change the system is Bitcoin. Go and listen to Mark Andreessen, the venture capitalist, 3 o'clock this afternoon in the Keynote room. He's going to tell you all about why this is important. This is important because innovation happens when customers are irritated, and they're irritated by the lack of digital value exchange through the financial network. So they've created their own digital value exchange for the internet generation, the Wikicoin, for the WikiLeaks generation. That's what that is. But don't think about the currency, because you're probably thinking, oh, the currency collapsed. It's a flawed thing. It's not the currency, it's the technology of Bitcoin that's really, really smart. It's called the blockchain. It's an irreversible, open, general ledger on the internet for contractual value exchanges. A couple got married in Disney World the other week on the blockchain. That is their marriage contract. Irreversible until they divorce, which will be on the blockchain 10 years from now, maybe. I hope not. And Mark Andreessen's got $4.5 billion of venture capital funding. And where is he sticking it? Into reinventing the financial services industry, because he knows the industry needs to be reinvented. It's broken. It's not digital distribution of data in a globalized network. It's physical distribution of paper in an old bricks and mortar network in the common stance of most companies. So everything's being reinvented, everything's being tackled, everything is being targeted for change. And if I had more time, I'd tell you about all these other companies as well. But rather than doing that, what does it mean for these big guys? The grand cojones of banking. What does it mean? It means they become systems integrators, financial systems integrators. We're just technology companies. That's what we do. We think we're financial services companies. We're just technology companies that deliver financial services through technology. So we become systems integrators. And if you look around the world of technology companies, none of the technology companies do it on their own. They take the best components and partners and people to work with them, and they bring it in and integrate it to make it work. That's what banks are doing and will be doing. They're already doing it. In India, there's a great example. This is a US company, SmartyPig. It provides social saving. The way it works is I say I'm saving for a MacBook Pro, and all my friends and family through Facebook and Twitter can contribute towards my savings goals if they want to. You could do this in Weibo or Badoo or whatever it is that you use as your social network. In India, they use Facebook. So ICICI Bank has taken the SmartyPig component and rebranded it, I Wish, as a Facebook social savings service for their customers. And it's really simple and easy. Hybrid models of financial services are going to appear all the time. There's already one in the UK where Funding Circle, which has already given £350 million worth of small business lending, because small business lending wasn't available from the banks, and that's just grown phenomenally. So Funding Circle are now in partnership with Santander. Reason being, from small businesses, big businesses grow. So small businesses get crowdsourcing, crowdfunding, and then as they get bigger, they need commercial banking, they elevate to Santander. Hybrid integrated models of component-based banking and financial services. That's where we're moving to. Financial services integrators as technology companies, as digital financial services companies. So what does that mean for your architecture? It means that you've got to rethink the way that you currently think. I get really annoyed with omnichannel. What is that? Some term that was invented by an analyst, and it got hooked into the industry. When we look at where we are today in digital, the customers are going to interact with you 20 to 30 times a month through a digital relationship. They will not have a physical relationship, and the channel was that physical relationship. That's what we call a channel. It was the original channel, the branch channel, the face-to-face desk channel. Customers have moved away from that. And customers don't need to be trained in how to use this stuff. Barclays Bank took 13 years to get 2 million customers to use internet banking. It took them just 2 months to get that number on their mobile services, because you don't need a manual. If you need a manual, you wouldn't use it. It's just an app, so easy. 95% of your customer interaction will be remote. You won't see your customers. How do you build relationships, service, advice, sales, marketing through that remote digital relationship? You do it by thinking about access, not channel. I used to run NCR's financial services strategy in the 1990s. This is my slide from 1996. We had a multi-channel integrator, an omni-channel integrator. We were trying to sell it to banks because the banks had a problem, which is that their legacy was causing them issues, and they wanted to stitch it together with a nice front-end interface. That doesn't work today because customers don't think that way. Customers are thinking 24/7 consistent service across lots of different access points. And if you've got this old channel structure, then you have a problem, because not only can you not service the customer because they can see the cracks in the system, but so can the hacktivists. So your cybersecurity is not going to be successful if you have split systems that are stuck together with lipstick on a pig at the front end. You need to be digital at the core. Internal and external, IP-enabled, consistent enterprise architecture based on a digital infrastructure. If you don't have it, you cannot be consistent. You're going to be broken. And where you're broken, your customers will see it, and so will those who are trying to target your systems. A lot of people don't agree with me that we need to rethink the whole core system. But the core system was built in an age where we had physical distribution of paper through a localized network, and then we built the channels on top of that and cemented that old structure in place. If we don't re-architect, we'll never get away from the legacy. We'll never get away to be digital. We'll never be 21st century financial institutions. But once you've done the thinking around the business model, the thinking around the architecture, the most important thing becomes the human factors, the organization, the people that sit on top of the digital core. And we need to think about the customer focus far more than I've seen in my experience of this industry, because we've all been product focused in our silos and structures, not sharing information. Baronial focus, where you say get lost to the commercial banks who want to deal with your retail customers, or vice versa. Where did that come from? McKinsey. Everything normally comes back to McKinsey or Goldman Sachs at some point in the presentation. 1960s, Citibank had a problem. They had multinational customers growing. And as a US-based bank, their multinational customers were saying, we're pretty annoyed that we're going multinational, but I'm dealing with Fred or Mary in the San Francisco or New York branch who happens to be my commercial banking manager and doesn't understand my multinational needs. I need FX, cash management, cash flow forecasting, trade finance, working capital, supply chain management. Tell me how you're going to deal with that. So Citibank gave the problem to McKinsey, and McKinsey said, the best thing to do is get rid of the Fred and Mary relationship in the local San Francisco and New York branches and put specialists who are global specialists in corporate needs in FX treasury, cash management, cash flow forecasting, netting and pooling, etc. And so Citibank organized around products. And then it was so successful, everyone copied them. And then they put that into all of their organizations across all of their pieces. So in retail, loans, credit, mortgages, deposit accounts, checking, it all sits separately. It doesn't work. And it doesn't work because we want to have a relationship with the customer. You can't have a relationship where you can't see the customer in their entirety. You can't have a relationship where you're not trusted. The main trust that we have in financial institutions is not in their brands. A survey of 10,000 millennials in the USA last year found that the top 10 most hated brands included the big 4 banks. The brands are not loved. They're not trusted. The trust is the Federal Deposit Insurance Guarantee, the state-backed license. So we don't have a relationship based on trust. We have a relationship based on a guaranteed state-backed license. But we want to be trusted. We want relationships. We want to be customer intimate. We want to be customer focused if we're a retailer of financial services. So where's the relationship? It's screen to screen. It's not face to face. The relationship is in the digital devices, the digital services, where the customer sees you the most of the time, in the network. And there's a few institutions that are working really well on these ideas. My favorite one is the one that's really social. And being social, what they do is they are embedded in Facebook and Twitter. They're in Germany. They have a bank called Fidor Bank. They are a fully licensed bank. They set their interest rates on loans and savings based on the number of Facebook likes. For every 2,000 likes that they get, your loan rate goes down 0.1%. It resets every year, but you can see here, this was from about a month ago, they had 19,500 likes, and there you go, it's gone down to 6.8% because they've got 21,500 likes a couple of months later. Now, why did they do that? They do that mainly because they really understand digital world. They are a digital bank. They spend 100,000 euros a year on marketing. That's not much for a bank. The reason they don't spend much is that they're getting all their customers through Facebook influencers. The average person on Facebook, according to Pew Research, has 338 friends. So for every 2,000 likes, they're getting over 500,000 people who are friends and family influencing individuals to like Fidor Bank. They're getting a conversation first. You get a conversation, you get into a dialogue, you get into a service, you get into a community, you get into a relationship, you get into a trust. That's how they're building their business. It's the reason why to acquire a customer for Fidor Bank, it just costs them $20 for a full Know Your Client registered customer. When BBVA bought Simple, the announcement included a little line that said the average US organization spends $1,500 acquiring a customer. $20, $1,500, there's a big difference. It's because old institutions think about pushing products through channels. Digital institutions think about building communities through access. So that's, I guess, in a very short piece, the key headlines. You have to rebuild your business model. You have to rebuild your architecture. You have to rebuild your organizational structure. And then people say to me, how do we do that, Chris? And I say, go read the book. Thank you.
Excellent. So you now have all the answers. Any questions? So in fact, the answer is obviously all in your heads. You know your industry really well. Salesforce really is, and I mentioned earlier, we're going to be leaning in a lot more into the industry, investing heavily. I don't know if the Salesforce industry financial services team can just stand up. Okay, you're going to see this number grow dramatically over the course. Thanks, guys and ladies. You're going to see this number grow dramatically over the course of the next year because we're investing heavily because that's how important it is for us to do more, to build more product that's relevant to you, to get even closer to your problems and make it easier for Salesforce out of the box to serve your needs, to help you answer these fundamental questions. And for us, that means what is the customer success platform that you know and love and you've heard so much about over the last couple of days, but what is that specifically for financial services? And how does that go across the whole customer life cycle from marketing, selling and onboarding, servicing, and collaborating and sharing? How can you build amazing apps, and how can you really supercharge those interactions with powerful analytics? And so we'll be looking heavily at ExactTarget, marketing. How can you lead your customers on a one-on-one journey? And how can you make sure that you are sensing and predicting by every time a customer touches you digitally, that you're being able to capture that information and really understand what they're trying to do, predict their next step, and take them on deliberate journeys. Not have a random ad hoc engagement, but take them on deliberate journeys, deliver personalized content to them. Okay, so now you've got loads and loads of people who are beginning to indicate that they're leads or opportunities for you, prospects. How do you capture those leads? Now, in the industry, there's a 5 to 7% conversion rate of leads. It's like amazingly low. But some of the amazing stuff that's going on with Huntington Bank and others to take that lead conversion rate, Bank of Montreal as well, from like 5% up to well over 40%. Capturing leads, enriching them, scoring them, routing them or routing them to the right people, and tracking transparently that progress. Onboarding, not just capturing name, rank, and number of your customers, but really capturing detailed information about their needs, their wants, their goals, so that whenever one of your employees is in front of them, they can service them really, really effectively, and not just effortlessly, but really capture and map their goals, their interests, their needs to the capabilities of the bank, and route them to the right person. But it's also really important that every single one of your employees is optimally able to do that. It's easy to collaborate. It's easy to find that expert wherever they are, hidden in the background in the bank, to share information like UCSF is doing, to find that document that's needed. And a part of that is to make it as Uber-like as possible through integrated workflow. Chris pointed to a lot of really, really great innovation. There is absolutely no shortage of desire to innovate in the financial services sector. But how can we make it as easy as possible? You saw yesterday Lightning, so the ability for you to make it even more easy to build really powerful internal apps, and of course externally facing apps as well, as quickly as possible. And also, how do you create really powerful data-driven sales experiences? So that moment of engagement where you've got the advisor and the client, that they're sitting there and in real time, they've got that data and you can play with that data. We're not playing with printouts that have been prepared before the meeting, but you've got an actual active conversation where you can play with propensity of risk or complex decisions, and in real time model what the future will look like, help them and become more, not of a vendor, but of a coach. We're really excited about that. For us, that is the customer success platform. And this is very much what you're going to see us spend ever more time investing in really in the service of you. So I wanted to make sure that we finished on time. I know how busy you are, but I think the other thing to just point you to is there's a lot of this information that's available today. If you haven't gone already, I really do recommend you go to the industries zone. You look at financial services specifically. We've built quite specific demos that we think you should look at. They'll give you a taste, a hint of the future. But also look at the other industries as well, and look at what we should be stealing from them and importing into the experiences of your employees and your customers. There are a number of spotlight sessions coming up. We've got a number of great customer sessions that are continuing today, stories where they're already on this path, already innovating in a very powerful way. We want you to hear those stories because it's really going to help. Just as important, though, I do want to point to our partners. As Salesforce goes ever more deliberately into financial services, we'll be making it much, much clearer to our ISV partners, to our systems integrator partners, where the real value is. And a lot of that's going to come from inside you. So I thanked you in advance for your advice and guidance. We need your advice and guidance for Salesforce to be ever more relevant to you. So please do continue to give us as much feedback as possible and make us your weapon of choice as you reinvent financial services. So thank you all very much.